Let's bring in Brian Nagel, Oppenheimer and Company Managing Director and Senior Analyst, right, about what you were expecting. The company was pretty transparent about what it was expecting.
Yeah, good morning, Joe. This is very much as expected. I think Courtney summed it up really well. The numbers are better than the published estimates, modestly, but the underlying tone, from Home Depot in this release is very much with what we've heard now for the past couple quarters. And we're kind of muddling through 2023, all with eyes towards 2024, 2025, when the expectation is that these home improvement trends solidify and begin to improve again.
Courtney, you looked at this so closely.
Yeah, I guess,
what's new in the report?
Brian, what I'm interested in is why do you think that they only reaffirmed the full year guidance when they beat this quarter by 20 cents? What does that suggest for the rest of the year?
Well, look, I think there's a lot of gamesmanship here, right? Remember, Home Depot lowered their guidance after the first quarter, which is a rare move for them. Okay. And you've had, we're going to hear on their conference call at 9 o'clock this morning, one of the factors behind a lot of this choppiness has been weather. Okay. So we had a weather disrupted Q1. My sense is, and we'll hear if they say this, on Q2, there were still weather disruptions, probably not as severe as Q1. But the point I'm trying to make is, there's still a lot of year left, Q3 and Q4. But more importantly, Home Depot knows how to manage expectations well. And there's really no benefit for them at this point, given the ongoing weather, other macro concerns, for them to lift guidance. So again, the whole idea is to get through 2023, relatively unscathed, and then we're playing for 2024 when, it's our expectation and those of others that you should see this resumption of expansion within the home improvement space.
So 2% in the sales drop, the comp sales was less than what analysts were expecting. What about the year guidance? Is that better, or there's still, it's a wide enough range where it could still be pretty bad?
Well, so the guidance for the 23 is exactly what they said previously. There was no changes there at all. And then going back to Q2, so they did a -2 comp, again, which is nothing spectacular. That's not Home Depot-like. But if you look at the street estimates, they were down somewhere from 3-4.
Yeah, 3.5. So does that mean not necessarily 2 to 5% for the year? Maybe they can keep it at 2?
That's probably what this means. If you take Q1 and Q2, now that we just got this morning together, what that probably means is that right now they're tracking towards the upper end of that guidance. And like you said, Joe, there's a pretty wide range there too. So right now, and that's probably what they'll say on the conference call is that, given what we've seen so far in the year, we're tracking now at the upper end of our guidance, which again is a wide range.
So the whole product mix, Brian. In the old days, you used to be able to win a contest where you'd have 10 minutes in a shopping cart, and you could take whatever you want out of a retailer. So it's a big store. I don't know how fast you can run, but you got 2 shopping carts. And you're not necessarily going to use it. You're going to sell it. What do you get? What do you grab out of Home Depot? Which aisle do you go down? What's the best stuff to put in a shopping cart?
Well, it's interesting. I follow very closely a company, Best Buy, right? It's a consumer electronics retailer.
That's a good one.
We've seen innovation for years. We're seeing that same dynamic now in home improvement, the home improvement channel. I mean, there's a lot of innovation. A lot of these products that were used to be old school are now much more technological in nature.
And they're expensive?
Expensive. I'd go to the tool category. I mean, you'll look at the tool category, or maybe this might sound really ridiculous, but the light bulb category. I mean, light bulbs are significantly more technologically advanced today than they were 5-10 years ago. I leave the lumber behind.
Brian, I just have a quick question here for you before we wrap it up. Is there an interest rate level at which Home Depot makes less sense as an investment, meaning rates are high enough that people are no longer investing in their homes? To McPhail's point, that they're really using cash instead. Have we hit sort of a tipping point?
Well, look, it's a great question, Courtney. I don't know if there's a specific level. I think there's a psychology behind this. One factor we're seeing, and we've been talking about this for the last few quarters now, is, and again, and this might sound kind of silly, but these higher rates, these higher mortgage rates, I think, have actually been a positive for Home Depot in that you have a large portion of the home-owning population of the United States now trapped, if you will, or stuck in these really low fixed rate mortgages. So what's that's encouraging people to do is stay in their existing homes and then work on or enhance those existing homes. So in that standpoint, higher rates are actually a positive. Now, if you look at it from another standpoint, I think maybe what you're asking is, there's a lot of bigger ticket projects are undertaken by home equity extraction. The rates on those type of loans have gone significantly higher. Again, I don't think there's a magic number, but clearly as rates on home equity loans have gone higher, that has been to some extent a suppressant, if you will, upon these bigger ticket projects.
All right, Brian Nagel, thanks. So you got a strong buy, you got a much higher price target. What do we do with this thing?
Well, our message has been, look, we have a $360 price target, which still represents some decent upside from current levels. What we've said to our clients is, very consistent with our conversation here, we think 2023 is this reset year. We have seen the stock perform relatively well, but my recommendation is, look, I'd be buying this on any weakness in anticipation of better trends in 24 and 25.